If you're new to trading and investing, I need you to stop what you're doing and listen up for a second. Lately, I have been receiving a lot of questions regarding if you should become a fast-paced day trader or a patient investor who plays the long game. Chances are you've been told you have to pick a side, right? Either be a day trader glued to the screen chasing tiny profits, or be a long-term investor just buying and hoping for the best years down the line. But here's the truth. That choice, that either or thinking, is probably what's holding you back. And that's a recipe for driving yourself crazy. When you're trying to day trade, you get this nagging FOMO that you're not building a real long-term position. And when you're just investing, you see traders posting their daily wins, and you can't help but wonder, am I leaving free money on the table? And this constant tug of war leads to terrible decisions like panic selling to chase some random stock bump, or worse, revenge trading your way into a hole. What if I told you that you don't actually have to choose? What if you could get the best of both worlds? What if you could scale the market for consistent daily income and use that income to build a massive long-term portfolio without ever having to deposit another dollar or naira from your bank account? What if you could build a system where your active trading literally pays for your passive wealth, creating a powerful self-funding financial engine? Stay with me because I'm about to break down the exact powerful two-part trading system that lets beginners earn daily trading income while still growing long-term wealth untouched. By the end, you'll know exactly where you fit in, whether a scalper, day trader, or investor. If you're new here and you want to learn more trading tips, strategies, and get weekly market insights, then don't forget to subscribe and turn on the notification to get notified anytime I upload a new video. And you can also give a thumbs up to like and share and help this video get at least 1,000 likes. So without further ado, let's dive in. So here's the big question. Are you a day trader or investor? First up, let's look at day trading and scalping. So let's break it down. Day trading and scalping are about speed. Think of it like being a sprinter, where the goal is speed and precision. Day trading or scalping is all about making fast decisions and small but frequent profits per trade and stacking them up daily. It is active income. A scalper might hold a trade for just seconds or minutes, while a day trader holds positions within the same trading day. If you look in this chart, this is Tesla's chart on the 1 minute time frame. So for a scalper, at market open, which is 9:30 a.m. Eastern Time and 2:30 p.m. West African Time, the price pulls back and you find your entry at this level here and ride it up to this high. Then you wait for the next pullback to enter here and exit at the next high, and then enter again at this next pullback and exit at the next high. So scalpers can take multiple trades within the day, and day traders can just enter a trade from this level here and ride it up to exit at this high. All trades within the same day. And you can see all trades happened between 2:30 p.m. and 4 p.m. West African time, which is 9:30 a.m. and 11 a.m. Eastern time. For day trading, one of its advantages is that you get to earn quick income because it is fast-paced. It is best done on shorter time frames. The 5 minute and 1 minute time frame is most ideal for day trading and scalping. And you also get multiple opportunities every single day. However, keep in mind that it is very stressful. It requires your constant screen time because you have to stay glued to your screen to monitor the price movement so you don't miss your entry and exit levels. Another downside to this is that it requires a high learning curve. So there's a lot to learn when it comes to trading, from fundamental analysis to technical analysis to strategies, risk management, and the trading psychology. And this is what discourages a lot of people from day trading. So if you love action, enjoy analyzing charts, and don't mind quick decisions, then day trading might be your lane. But remember, maintaining discipline is crucial or you will burn your accounts very fast. On the other side, we've got investing. This is the marathon. the long distance race that requires more time and a steady pace. Investing is slow and steady, letting your money compound in great companies or ETFs over years. It is wealth building, and that's why you have successful investors like Warren Buffett, who buys and holds quality assets for months or even years. So they don't worry about daily price swings. They are more concerned about building wealth over time. So this is SPY chart, which is an S&P 500 ETF, and you can see how it is slowly but continuously moving upwards over the years, even though its price dropped at certain periods. So investing has its own advantages. It is less stressful. You don't need to monitor charts or be in panic mode when the price falls or pulls back. Because it is time friendly, you just invest your money into quality stocks and relax till the price appreciates to a level good enough for you to take profit. So you benefit from your money compounding over time. But on the other hand, with investing, there's no immediate or instant excitement. It requires a lot of patience. Growth and value stocks and assets like Bitcoin and gold takes time to grow. And to invest, you need capital. If you're working a full-time job or prefer a hands-off approach, investing is usually the smarter choice. So here's the big truth. You don't have to pick just one. The best strategy for beginners isn't the either or choice. It's a hybrid. And why is it? Because this system gives you the best of both worlds. Daily cash flow plus long-term growth. Here's the secret most beginners miss. You don't have to pick one side. The smartest traders use a two-part system. 1. You have an active account for day trades or scalping. This is your daily income account. So you create a trading wallet and dedicate only a small portion of your capital, say 20 to 30%, and use it strictly for active trading or scalping. These trades are short-term, fast, and designed for daily or weekly cash flow. Think of these as your daily income engine. And 2, you have a long-term account strictly for investments. The remaining 70 to 80%, pack it in strong long-term growth assets, that is blue chip stocks, index funds, or ETFs that mirror the S&P 500 or the NGX. This account stays untouched, no matter what. That's your wealth builder. Here, you're building wealth by holding strong assets, ETFs or stocks for the long run. The beauty of this system is balance. You get the excitement and cash flow from active trading while your wealth quietly compounds in the background. Even if a trading day goes bad, your investment portfolio is still growing. By separating your accounts this way, you train your mind not to gamble with your future while chasing short-term profit. Why does this system work? This system works because it taps into two powerful principles. First one is consistency of income. You are sure of a regular income, and your trading wallet helps you practice discipline while putting cash in your pocket. Even if you only make $20 to $50 a day, that's real money without touching your long-term investment. And the second one is compounding growth. Your main investment grows in the background, silently compounding. Over time, the growth in this account will dwarf your short-term trades, but the trades keep you engaged and learning at the same time. The psychology is also powerful. You reduce stress because your future wealth is safe, while your day trading energy is focused and controlled. As a beginner, how can you start implementing this strategy? Well, here's your beginner-friendly action plan. First, start with paper trading to practice scalping and day trading. This is where you learn and backtest all your strategies to see which works best. This is great because you don't get to lose any real money. Whatever gains or losses you make are all on paper, but the main goal is learning with practice, which makes you become a better trader. You can check out my previous videos on day trading strategies for beginners and trading strategies for the Nigerian stock market to learn and master the best strategy that works for you. The next thing is to allocate 20% of your capital to active trading and 80% to long-term investments. You can use dollar costing average. This is how dollar costing average works. Instead of putting all your money at once, you buy at multiple points over time, say weekly or monthly, so that you can average down your cost. And then go ahead to use tools like TradingView for analysis and choose brokers that support both short-term and long-term trading. And finally, build habits. Learn to journal your trades, review weekly, and never risk money you cannot afford to lose. Trust me, following this plan gives you the best of both worlds. So, are you the fast sprinter day trader, the marathon investor, or a mix of both using the two-part system? Drop your answer in the comments. If you found this helpful, smash the like button, subscribe, and share this with a beginner trader. And remember, whether you scale, trade, or invest, the goal is the same: financial freedom. And I'll see you in the next video.